The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi folks, Basil Chapman, Tiger Technicians Hour, and thank you, Steve, for 2 great hours. And we're right into the day with a plunge in the market, and then all of a sudden the Dow is up 21 at 16,290. This is not going to be easy. This is still a rotational market. If there was a close at today's low on the Dow, which is, let me just double check right now, the low is 16,191. I would say, okay, the arch formation is clear, and we're going to be going down, test the 16,126 area. That's a Roman candle low. Break that, you go to 16,046. Meantime, that 9-period moving average is being hugged by the Dow, and that's why I've had to make it very clear. This is not yet a bear market. It is absolutely a bear market in some sectors, but it's not a bear market in the overall indexes just yet. Certainly, there are inklings in the cues that there's a bear phase going on, but there's no confirmation in price just yet. So as I'm looking at this, I'm going to do one quick thing here. Give me 1 second, because we always try to give you the very best in quality and in pictures, etc. So if you're looking at Tiger TV, you will see that we are on, and I'll just wait for my engineer to confirm something for me, and I can switch in a moment. I'm all ready if he wants me to switch. In the meantime, let me do this. I want to go through some of the numbers. I think this is a counter-trend bounce right now. The work that I've done going towards the monthly charts, the weekly charts, but especially the monthly charts, is becoming clearer and clearer. It has been fairly clear, but now it's becoming much clearer. So I'm just going to run the numbers. The Dow is up 19 at 16,288. S&P's lagging. It's down a point at 1851. Comp index is down 13 at 4159. That IBB, the NASDAQ biotech sector, which we are still short from just about the top, having tried a couple of longs with very small losses a couple of days. I didn't want to touch it. My thinking here is there's a real good chance that the fund managers wanted on their books that they are now lighter in the biotechs, and they will get out of these biotechs going into the end of the month, which is Monday and maybe Tuesday, and then we could start to see some kind of a rally. Didn't want to touch it on the long side, was hoping for a pop-up so we could get it in the short side again. We've had a number of shorts which have been very successful. Now, what's very interesting is the VIX is at 1501, back in the 15s. It slipped earlier today. We're also looking at, now I want to go through this, the gold. The GLD is down 34 cents at 125.11. Really doesn't look too good right now. Gold itself is down 6 at 12.97. You've got high-grade copper. Well, let me give you silver. Silver is at 19.69, down 9 cents. High-grade copper is back in the 290s, under 3. It can't hold 3, at least not at this point. The dollar is up 2 cents at 80.05 on the index, and we've got bonds up 430 seconds at 133 and 23 30 seconds. Now here is what I really want to look at. In the E-mini, the 120-minute chart had a spike above yesterday's last 120-minute sharp move down. It's got a Roman candle and it says very clearly, I don't know if I can get the price. Let me try it here. If we go down in the E-minis, under 1838, it's trading at 1843 right now. It's only 5 points away, and holds there, then there's a good chance we can retest yesterday's lows. As it stands right now, the big challenge is 1845 on the 9-period moving average. I had a quick question. Well, it was a question. I don't know if it's a quick one about the 5-minute. I showed the 5-minute chart of the E-minis. Yeah, that made a peak D at the 200-period moving average at 555 this morning. Then it just 555. Wait a minute, that's 555. Was that the one? And then it plunged. Yeah, they're 555. And then it ran down to, that's the 5-minute chart. Oh, that's right. It went down to 1834 round number and spiked up to a high today of 1848.50. And now it's giving back a good chunk of those gains. I must tell you, everything I'm doing says this market is headed lower. And that's right, it was the 2-minute chart, and I was actually trading that went to a peak D just under the 200-period moving average at about 9:34 this morning Eastern time, and then it plunged down to 8:34, and then spiked up to the high of 1848 peak D in the 2-minute, and now it's pulling back. That 200-period moving average at 1844 will be key in this particular pattern. All right, let's go to our first caller. We've got Nahid in Safety Harbor. Hi, Nahid. How are you?
Very good, thank you. How are you doing?
I'm well, thank you.
That's wonderful. Could you please be kind enough to look at the BIDU? I shorted it, but now, I mean, I'm doing okay, but I'm not sure where it's going.
Nahid, this is very interesting. Baidu, BID, you're trading at 148.04, down 4, and we should still call you the Baidu lady, the queen, Baidu queen.
Yes, it was queen.
It was queen, right? Because you've had tremendous success with your technique using Baidu as a long or a short, whatever you decide to do. I've got a count in the monthly that says peak C, and leg C probably almost certainly by Monday will be a peak C. That doesn't tell you all that much because I have no other way of counting it, and C's barely ever fail in monthly charts, especially major stocks. So I'm suspecting that this is going to be a pretty serious intermediate term pullback, and at some point this year, sometime in the summer maybe, Baidu just gets another burst of speed and goes to a D. I'm not even dealing with that. My weekly chart has gone to a decisive peak E, E, then an F, and then a G. So I'm trying to do this because I'm trying to give you the setup that says you might be able to treat this as a more intermediate term short position if a couple of things. It's a little late from the 189. What was that?
189.
189.34 high bar. Let me just type that in because I'm checking for some round numbers. 189.34, and prior to that, it had 186 round number the day before on the 6th, and 189.34 on the 7th. And no round numbers after that. So 186 is absolutely key in Baidu in the very long term because it's a round number. I'll call it a high. I'm just going to call it because it wasn't the high. It was a high the day before. I'm just putting it in right there, just as a reminder. Now, this is what I'm looking at. Do you see the stochastic? And you know how much effort and time and work that I've done in talking about the stochastic, the reading that is given invariably in every book, right, just about every book, is that under 20% it's oversold, anything you're looking at in the stochastic, and over 80% is overbought. And I say, wrong terms. Then I heard Kramer the other night calling it an embedded overbought condition. I thought that was really good, but not good enough. I don't know yet what the term is. I'm spending a lot of time because I've got this Master Trader seminar coming up a week from Saturday here in Wellesley at Babson Executive Conference Center, an all-day one. And in that one, that's a level 2. It's a review plus new techniques plus the refinement of the older techniques. I've already started, and the MACD stochastic webinar that I had a week from, just Thursday a week ago, I had that, and I spent a lot of time talking about the MACD and the stochastic. So I treat these things with a lot of respect, and it doesn't get respect when it's called oversold or overbought. If I say to you at 4.76, the stochastic in Baidu is oversold, wouldn't that imply to you that there should be a bounce, meaning oversold, that there should be a regression to the mean?
Right.
It does to me. It's not. It's in, and even an embedded oversold. I guess it's kind of good. A little too many words, but it is in negative territory. I think that's the best way to do it. And when the exact inverse, take away 4.70 from 100, and now you're talking about if Baidu was trading as it had for a long time with the stochastic. Where was it? It was over here. Actually, Baidu doesn't hang around above 80% for very long, but it was at 90. It was at the 88 to 90 area back in December, the first 2 weeks of December, and it held beautifully. So that's the exact opposite. You know what I always say? If it stays in the mid 90s, you do not want to short until you get either Chapman wave peak D or E or F, or you've got other techniques that are saying to you short, because that's saying that's exactly what you want to see. That's giving you the momentum. You've got the stochastic that gives you the thrust or the torque, and the momentum, that fast line in the MACD, or the holding above 90%, especially in the stochastic, that is ongoing momentum. So now let's go to the issue that you're involved in. If I bring up the 120-minute chart, the candle that I'm looking at now, normally I would say, oh, be a little careful. But the stochastic's at 9%, but the MACD has started to expand on this pullback. So I would suggest that, I don't know if you are thinking of this as position play or very short-term trade to take profits and just keep taking profits on the short side. But my thinking here is, I don't know where you got in. If you just recently got in, then you do have to deal with 153.53, which is the 9-period moving average, which bounced from, 8 points. That's a pretty big bounce. I'm thinking that Baidu is in trouble. And that if I'm looking at anything, even if there are bounces, they're bounces in which, at this particular point, I'd be shorting Baidu. So you have shorted.
Good for me. That's good.
Right. So the trend has changed to down in all time frames, even though the price is probably in leg C. There's no other way I can count it in the monthly. The stochastic's at 81. That's okay. MACD's turning around, but it's way, way lower than it was before at the highs, the previous highs. I'm thinking that Baidu's in trouble. Therefore, I didn't want to say to you, fantastic, I take profits now, or I'd raise the buy stop. I'm saying to you, if you can have one position that says I'm going to give it a bit of leeway, and in a shorter time frame, let me just go, if I can, real quickly. Folks, we're looking at Baidu, B-I-D-U, and Baidu, I'm going to the 30-minute chart right there. Bring it up, and B-I-D-U. Yeah, ugly chart. This is it's in real trouble. I would say, we've got music coming up. I'm going to do a quick analysis during the break on the 30-minute chart. Meantime, I'm looking at it and saying 151.30 is probably where you want to be a little bit careful on the short side. Give me a few minutes, and I'll be back with Nayid and Mark.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, the Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. I just want to say that for those of you who use the Chapman Wave methodology, the Baidu monthly did have an instant restart in November of 2010, December of 2010, and then that was the high of November, and then January turned around, and then February of 2011 broke out. That was a 3-bar instant restart, and that's what I call an unconventional restart. So I have every legitimate reason, if I was to use that particular technique, to say this could probably be an alternate count D in Baidu. But to tell you the truth, I would rather say I've got the weekly chart, I've got the daily chart. That's what I'm dealing with. So this is what I'm looking at now. If at any point today, between today and tomorrow, if it doesn't take out 151, but in fact Baidu trades at 146.35,
right.
If it holds there, there's a really good chance it's going to test the low of 144.16. That's really what you want to see. So 151.20 is the 9-period moving average, and the 30-minute, I'd say be a little careful, but my suspicion from the way the chart is looking, that if there's no bounce to a minus, better than a -2 today, but in fact it closes somewhere around here, Baidu is going to just arch over, and it's going to turn around and retest and go lower. But on a purely technical basis, that flat stochastic in the single digits is your clue to saying until there's a really strong buy signal in, say, the 120-minute chart, this is going to stay flat, and all bounces are probably going to fail, and it's going to make lower lows. So I hope that helps you.
Yes, thank you so much, Basil. I really appreciate this.
Thank you very much for calling. Always appreciate that. Thank you. Good luck.
You. Bye.
So let's go to Mark in Denver. Hi, Mark. How are you? Mark, you there? Maybe Mark's a little delayed if he's listening on a computer. So, Mark, whoops, I don't know if that was Mark, and he just got hung up upon. Mark, call me back if you can. I can see here that you want to talk about the Dow Diamonds, the DIA. Now, I'm not sure exactly what you wanted to talk about, but I'll just talk either way.
Hello?
And then if you come back on,
Hello?
just yell, "I'm back," or Al will say to me,
Hello? I'm here.
You're there. Okay. Your question is, Mark.
Okay, so since the low of March 14th,
yes, that's the low. This is the Dow Diamonds. That's the low of 160.38. Yep.
correct, we're in, unless we've been negated by the action today, in a leg C, not a peak C yet. Is that correct?
It's what I call, to make it absolutely clear, I like my notations to be articulate in the sense that it explains exactly what I'm talking about. So this is a retracement failure mode because the steepness of that 164.89 point peak F high back on March the 7th, I believe it was,
right,
plunged down to the 160.38 level. That's what I shouldn't say plunge. Sharp pullback of 4.40, and then it bounces back. So this is a retracement failure mode. So it's called a gray C.
Right.
I see very little chance today. I just don't know what would be the catalyst to make a move above 164.33, the high of yesterday. So far, I see absolutely no chance of that happening. So let's call this a potential peak C.
Correct.
Now, if that's all right. So now continue with your question.
So, what is the chance that we do our typical leg D here before we completely roll over?
Two things. One is that the chance, because C is so slightly higher than B,
mm-hmm,
and B is only not that much higher than A, my eye is saying, get rid of that candle or raise the candle, sorry, not the candle, the trend line, and instead go back to what you had before and put in the H pattern, the lowercase arch, or H pattern, and that says that there's a really good chance that if by the end of the day, instead of rallying above the 9 EMA of 162.63, the Dow Diamonds, this is the vehicle that trades together with the Dow, they're very much together. Sometimes, occasionally, especially when I get my stalk leg formation over the years, I haven't had it happen recently, but there was a period where one of the two, the Dow Diamonds or the Dow, would fail to make D, and one of them would make an exact, usually it's the Diamonds, would make an exact parallel high of peak C, not go to D. That's actually where I learned to use the technique of peak C1 and peak C2. So now let's just go back to what I'm looking at here. When I'm looking at the Dow Diamonds, you see the MACD still has not crossed positive, but it really hasn't accelerated to the down. The fast-moving average hasn't accelerated to the downside. The stochastic's only at 53% and flat. And that says to me, limited. Do you have time to hold?
Yes.
Great. I'll be back with Mark. We're looking at the Dow Diamonds.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Andy Hecht will be hosting his first paid workshop on TFNN, the Techno-Mental Trading Method, which is taking place Friday, March 28th from noon till 3:30 Eastern Time. Relying on his decades of experience as a professional commodities trader for some of the largest and most well-respected firms in the business, Andy will be teaching for 3 full hours discussing the application of the technomentals he uses when trading commodities, futures, inter and intra-commodity spreads, commodity-related stocks, ETFs and ETNs, and related options, and much more. You'll receive an added bonus of a quick reference guide that Andy has put together for everyone that attends that breaks down the U.S. traded commodity-based ETF and ETN products available to you as a trader. The Techno-Mental Trading Method, Friday, March 28th from noon till 3:30 Eastern Time. This workshop will be archived so that if you can't attend live, you can view it whenever you'd like on demand for 30 days. For all the details and to reserve your spot today, visit the front page of TFNN.com. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math, risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, folks. We're back, and we are looking at a Dow now that's down 26. S&P's down 6.5. I have to tell you, we have just begun from the rotational aspect. Yesterday's peak D in the Dow Diamonds, in the Dow, both the Diamonds and the Dow itself. Let me just put this in here. Peak B, peak C. And this is the thing that, one of the reasons why we wanted to add to our short positions this morning was because both the IBB I decided was not any way to go long at all, because fund managers would keep wanting to clear out their inventory as we go into the end of the month. That's not going to help the S&P. It's not going to help the Qs. And the diamonds don't have any of that in there. So the diamonds itself, the 120-minute chart says a break underneath the 161.50, and you've got 161.11 as the 200-period moving average. Excuse me. Very important support. Now, so mark what I'm looking at. Because it was a gray A, a gray B, a gray C, there's a chance that if the diamonds give back today's gains later on or by tomorrow and start to slide, that C will become a C minus. But most importantly, the pattern I'm looking at here is a pattern that's becoming really familiar in the weekly chart. And this is one of the things I'm going to spend a lot of time on next week, Saturday a week, in my Master Trader Series, Level 2, so that even if people have done just a couple of webinars or have my CD, but they haven't done my actual Level 1 course, as long as they understand the patterns and they trade this, they'll understand that the rectangle that I drew a long time ago in the weekly chart of the Dow Diamonds, that pattern is a very familiar pattern where it makes a rectangle formation. Within that, it has an attempt to go to a peak A, B, C, D in a smaller time frame. When that's completed, the arch formation, if there's no new high, says be careful, because if you start to take out the supports, as I said before, 160.38, I'll call it 160. You go into the 159s, all of a sudden, the MACD continues to deflect lower, and the stochastic, which is at 74%, not good at all, starts to go down to the 67% area. You've got yourself a chance of an H pattern that says you can now, the tide is turning so much that you can now think of higher highs and higher lows. So the only thing that's going to change this is not a break above 164.89, the high of peak F on the 7th of March, but a high of the December 31st all-time high, which is at 165.51 at a peak F top. That, to me, that's the only way I can start to say, wow, that's bullish action. Right now, it's rotational. It is very negative. You're looking at certain stocks. I mean, I'm looking at our portfolio in my opening call. We've got two stocks that are still doing very well today, even with the turndowns. One was up 4.5%, now it's up 2.8. Another one's up 20-something, 0.20%. In a market that's really very negative. This is a very select market. It's becoming even more select. I had a question in the den. There was a question about which is better to short, LVS, that's Las Vegas Sands, which had a spectacular move to the upside, made all-time highs in March, and now it's plunging to the downside, or UA, which is Under Armour, and also made a high this month, and made a leg F in the monthly, peak F probably in the weekly, and a peak D in the daily. These have been leaders, so you're starting to see the leaders get clobbered, especially the investors business daily type, very high tech, not high tech, but high PE stocks. So, any further questions there?
No. So it sounds like you flipped negative. You don't think the Dow's gonna make this gray leg D. No,
I don't. I don't think it's going to make a leg D in diamonds, the high of yesterday. At least, I don't know what the catalyst. There's always something that could be a catalyst. I just don't see it. I think now we're starting to get a filtering of a little smattering of bad news here and then. It's the volatility index, and that VIX is now at 15.34. I suspect that the VIX, if it starts to go into the 16s, you will see lower highs and lower, if it stays there, lower highs and lower lows, and that to me will be the big tip-off that the volatility index is attempting to start to make a higher base. Now, that's speculation. As of now, all I can say is that the VIX index made a new, can't call it a recovery low. It made a lower low the other day. It went to 13.46, just above the 13.44 low of the 14th of February. So all I can say is that if it starts to trade above 16.07, the high of the 24th, that's when you've got to be real careful about your long positions. At this point, you can still keep rotating, but I suspect that the way the VIX is acting right now, it is really wanting. The predominant candles are starting to become green candles instead of red, but not so in the weekly chart. And that's why tomorrow's close at 4 o'clock, really important. Where that closes will tell me if it closes above, for whatever reason, closes above this trend line and can go to the 16.50 area, that'll say, whoa, be really careful from here on out. And that's the reason we've been increasing our shorts. We've got some long positions, but we missed a great short in Panera yesterday, just missed it, and the darn thing went down 12 points. That's the way it is when things are bad. Your high flyers start to take it on the chin, and I just see too many high flyers that are really struggling. If I look at, there's a pattern I wanted to talk about. Verizon weekly has the same pattern. It has that H pattern. It's already started to turn down. MA, which is MasterCard, has the same pattern. It has almost tested its low of 71.70, 71.75 the week of the 31st of January. And American Express, same category, did make a new all-time high. Looks like a peak F top. Boy, if this thing, so if American Express starts to take out, by next week, takes out 87 to 85 support, that's not a good sign at all, and that'll hurt the Dow because this one has a weighted, it's fairly highly weighted. So thank you very much, Mark. I appreciate you calling. I hope that covered a chunk of what you were looking at. Now, a couple of things that I want to look at, and I want you to do this. I said on Thursday I'd do a little bit more in the currencies, looking at the commodities. So here we go. EUR USD. This is the euro dollar currency pair. Peak E-top made on March the 13th at the 1396 area, trading right now at 137. The weekly chart says if tomorrow it closes underneath 1.376, that'll be the first time it's closed there since it was down there at the end of January, beginning of February. So that'll be a negative. And it's leg E in the monthly chart. If next month, all of next month doesn't make a new high, then you're going to be looking at 1.35 to 1.33 as a potential target for the euro dollar. The only thing that'll save it if there's a sudden spike above the high of the 24th at 1.38751. I don't know what's going to do it, but it could. So let's look at the USD JPY. That's the United States dollar and the Japanese yen. Made an Eiffel Tower V-shape, inverted V-shape, up, down, peak D pattern when it hit the high of the 7th of March at 103.754. In a little trading band, looks like an H pattern. Now, the weekly chart is going to be very important because the stochastic has pulled back very sharply to 28%. The MACD is good. I'm sorry, the MACD is poor, but it hasn't broken down yet. So I'm looking at this and I'm saying the only way you're going to be able to get a cup formation, which would be very positive, is if two things happen. One is if it doesn't break the low round about 101.2 that was made last week and the week before and the week before. That's number one. And number two, it needs to decisively break above 103.754, the high of the week of the 7th of March. And if it does that, then you've got your U pattern, and then I could even start to draw in left side, right side price time match, and that could take you, if it did do that, that would take you to the test 105.43, the high of the week of the 3rd of January, and that would be right there, and that would be the week of the 18th of April. So that's what I'd look at. If it doesn't do that, believe me, you've got an H pattern, and if you break underneath the low of 100.749, that's a real problem. It's peak C in the monthly chart, which says you should get to a D, even though it's a retracement failure mode. You should, because the stochastic still at 88%, and the MACD is still very strong. That fast-moving average can deflect higher to make the M pattern, and that'll allow it to push higher. So those are the parameters I'd be watching. If you're looking at the bonds, look at the TLT. The TLT is trading. Whoa! I've been mentioning all week that if the TLT breaks the 109s, goes to the 110 level, that's very positive. This is another negative for the market. Money will start to go back into bonds if bonds start to increase. And the TLT is a 20-year Treasury bond, a Lehman Treasury bond fund, and it's in leg B. There's that pattern that we always talk about. That's the breakout over the previous high. Now you can start to look at that type of thing on the upside. Woohoo! Good, I'm pleased I saw that. I almost went along the TLT this morning, and then I thought, you know what, there are other things that we're looking at, but maybe that was the wrong thing to do, because this could last a little while. I've got this as leg B, because leg C was a C minus when it broke down and went to 105.60, 2 cents below the previous trough. So this is leg B and very positive for bonds. And so that's going to say bonds are moving higher. The next thing I want you to do, I haven't looked at it for a little while. Let's see if I've updated it. This is coffee. Remember I said that it was making a peak F-top with a long-legged doji, and that plunged from peak F. Folks, in my webinar, in my live Master Trader series coming up a week from Saturday, I'm going to be looking at all these different patterns. I'm going to be showing you how powerful these E's, D's, E's, and F's are in the monthly in the Chapman wave methodology. Now, many people know that. That's why they'd be taking it, because it's a level 2 course. But if you're just familiar enough with all the things that I'm discussing, this could be for you, because there's a lot I'm going to discuss that has very little to do with the actual waveform. Why? Because it has to do with, let me show you here. 1 second. I'm going to show you right. Oh, boy, I hope I got the right thing. Let's give this a chance. Oh, is this the one? No, that's not the one. This one here, right there. Is this the one? Yes. I'm just sliding it over. Look at this. No, that's not the one. This is the one right here. Oh, sorry. There it is. Okay, look at this. This is right here, the Dow monthly study. This study that I did shows you the Elliott wave in the monthly chart of the Dow. EW1 pulls back, and it goes to EW2, which is just a tad under the exact 1-to-1. But I have a new technique, not a new, it's a technique I've done for years and years, but it'll be new to many people. And you don't have to know much about Chapman wave peak A, B, C, D. This is just how do I use this measurement? You see the pink line? That to me is a 1-to-1, and it misses by just a little bit at peak D in the Dow, but it goes A to B equals C to D, or close to that. It does it pretty well. It goes a little higher in the Qs, but it's the same principle. And that's saying to me, in Elliott wave, we have come almost to the end in the monthly chart of that particular move because of the wave, the Elliott wave 1, Elliott wave 2 down, Elliott wave 3. In the Chapman wave, you've got a peak D in the Dow since December the 31st. This is the longest we've had a D since the top back in 2011, in May of 2011 at 12,876. Here's the other thing. I haven't even gotten to this particular chart here, if I can find it, that I always spend a lot of time on. Am I going to find it in time? No, it's not there. It's right there underneath. There it is, that monthly chart. Remember, I've been talking about this. What happens after a peak C if it takes a little while to get there? I'm going to be discussing that in great detail. I'm going to be discussing these patterns. I'm going to be discussing something else. Gosh, I hope this is the one that I wanted to find. No, it's not. It's not there. It's this one here. Right here. There you are. See these channels? I haven't even updated this one. You see how perfectly these channels have worked? Now, if I scale, I'm going to go to 22, right there. If I scale, I've got a D to an E in the S&P monthly chart. I'm going to be discussing what the implication is when, in fact, you get an extension that goes just above a very, very long-term trend line. In this case, that's the trend line. Turns out to be a channel. Turns out to be the inside track reversal area. What happens and what you need to see to be able to get a reversal of substance. And if that reversal of substance, which is extended a tad, 1777 was the level that I was looking at, it went to a high most recently of 1883, 97. I'll talk about this as soon as we get back. And we got Bob and Rumson.
You take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risks risk of shorting and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi, folks. Just we're going to go to our next caller, but before I do that, we have wonderful callers in all the shows. You always hear really wonderful callers, and we've had Ari called yesterday or 2 days ago to talk about EWZ, the iShares of Brazil. Fantastic call. It's soaring. It's up 44.24. It's up $1.72, up 4%. And wait a minute, what about PBR? We had George from New York calling in, talking about it a while back, and he's in it. It looks great, up 7.2% at 12.86, up 86 cents. And Brent called yesterday, and he called from California, and he was in it, and he had calls, and oh man, this is just beautiful to see. So I'm thrilled about that. And just a quick question that you have as we go to our next caller. We've got Bob in Rum, another great caller. Bob in Rumson, New Jersey. Hi, Bob. How are you?
I'm fine, Basil. How are you?
I'm well, thank you.
Great. I'm seeing a rotation here with the banks. They were buying them, and Bank of America now, to me, is either made a peak F/C going back on March 24th. And I wanted your opinion on short the stock.
So let me just do this. So we've got on the 24th, we made a peak D in my work on the way I count it. because I started my count fresh on the 28th of January. So now you've got ABCD, pulls back, and then it has that right arm extension. I call it the rogue wave, and it spikes up I'm looking at the wrong chart. I'm looking at GDX because they look the same. So you're absolutely right. So I've got an alternate count. I've got an F/C right here on the last peak on the 21st of March. And the reason is I carried over from the previous D at 17.42 on the 15th. It doesn't happen often, but you just sometimes have to have that alternate count if it doesn't break down below the previous starting point, which is at 15.06 on the 18th of December. So this carries forward as a potential continuation pattern rather than a brand new. So I call that a peak F. And now, and this bank, every single person is talking about Bank of America being the bank to own.
I know.
And I'm saying I got a leg E, probably a peak E in the weekly. I've got a G/C in the monthly, which is still very good. But the weekly and the daily are saying, whoa, be real careful here because it needs a digestive pattern. And I suspect that Bank of America trading down 26 at 16.92, if it takes out the low of the 14th at 16.76, you got to be careful because that whole area in the low 16s becomes a key support because the major trend line support on the weekly basis is around about 16.08. So I'd be a little bit careful later on. I'd love to be looking at Bank of America as a potential. We've owned it in my opening call a couple of times. Haven't had it recently. It's had some real wild up and down moves, but I think it needs a little rest. Hope that helps you.
Yeah, I'm not long. I'm short the stock.
Okay, if you are short, then I would just say that watch out for some part of your position if it pops up over 17.49. My suspicion is that it won't be able to get there, not before it tests the low of 16.76, which was made on the 14th. I think you're in a good position.
Thank you. Have a nice day.
Thank you so much for calling, Bob. So, yeah, just a couple of things because we've got Larry coming up and should be a wonderful show with Larry as always. Really looking forward to seeing what he says about the commodities, etc. But let's just do this. I'm going to make it real easy. I'm going to the VIX index. And one of the reasons why we've been increasing our short positions is because I'm suspecting that the way the VIX is acting, it's reluctant to go back to that base in the 1350 area and break it. Now, I could say that, and by Monday, who knows? But that's the way it's looking right now. And it looks to me on the weekly chart that you're making a higher base. That whole area of 1344 is going to be a base to watch. So I'm watching this really closely, and my suspicion is that we'll have these little counter-trend rallies. IBB won't be able to do all that much until the selling is done going into early next week. Hey, stay tuned for Larry. I'll be back with Tom this afternoon. I'll see you tomorrow.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This is TFNN.